Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host, Joel Elconin, along with Brianna Valesky, and we have Paul Johnson on the line, and he is the publisher of Stock Confidential, stock picks with home run potential. How did you come up with the tagline, Stock Picks with Home Run Potential?
Well, thanks for having me, Joel. In the beginning, it was just basically having fun with the concept, home run stocks. But when you stop to think about it, isn't that just about what everybody dreams of? You latch onto a stock, maybe that not so many people are following, and ride it up 10, 20, 30% in a very short order. And you watch your trading account basically explode. And, I've been lucky enough to have a number of really huge movers. And I post many of these, my top stock picks, in the social media, so people can kind of see the types of stocks I'm always looking for.
So, what social media do you use? What are your handles? How can people find out about you on social media?
Well, I'm big on the social media, and in fact, I don't spend a single dime on advertising. And frankly, I don't need to anyway. But I post charts on Seeking Alpha, Twitter, StockTwits, Google Plus, Facebook, InvestFeed, LinkedIn, even Pinterest, and the usernames kind of vary. Like Twitter is STK Confidential. You can just look my name up on Google Plus or Seeking Alpha and some of these others. But my point is I want to engage with my followers and my subscribers so that people subscribe for the right reasons because they know me, they see the charts I post. Not because they're confronted with these annoying ads that you see that follow you all over the internet wherever you go. I don't like that much.
How did you get interested in stocks? Is something started as a young kid, or something you started to follow as you got older and got some money? How'd you get interested in stocks?
Well, that's an interesting story because I was an account executive at the Business Channel here in Los Angeles, KWHY Channel 22 for some time, and I was very fortunate in that I'd be able to rub elbows with some of the top traders in the field, top technical analysts and so forth. And many of them were clients of mine. So that was a great exposure. Now, publishers would send me all kinds of books on trading in the stock market ahead of an author's visit to the station. And one day, one of my clients came into my office, and I had a whole shelf of these books, by the way, in the corner of the office. And one day, one of my clients came in and pointed out John McGee's Analyzing Bar Charts for Profit. And that was collecting dust with all the other books in the corner of my office. But he spoke so reverently about it. I thought, well, I'll take the book home and see what it was like. And from there, I was hooked. It traced the origins of technical analysis all the way back to Charles Dow, if you can believe it. And I was just so impressed with the predictive power of stock charts. And, after that, I just kind of made it my mission to find the holy grail, if you will, of successfully trading stocks.
Okay, so do you follow the entire universe of stocks, or do you like to focus on different sectors at different times? What type of stocks do you follow?
Well, I try to follow the top sectors mostly, although that's not always the case. Sometimes you find hot stocks and sectors that aren't so hot. But I follow basically the same growth stocks that the big institutions do. And that's normally leading stocks. They want stocks that have really strong track records that are going to make them some money. So they're looking for stocks with strong earnings and earnings growth. Not only do top leading stocks, growth stocks, usually explode for bigger moves than most of the other stocks because of their institutional followings and so forth, but they also kind of function like canaries in a coal mine. They tell you how healthy the market conditions are. When they start keeling over, it's time to circle the wagons, basically, and raise some cash. When they're breaking out with abandon and making new highs, that kind of tells you that the market conditions are really good. And yet another thing about growth stocks, and especially leaders, is they're the ones that make the acquisitions or get acquired. They're the ones that many times get the analyst upgrades and so forth. And I just find that the more I follow leaders, the more luck I seem to have,
Do you employ the IBD's Can Slim strategy?
Yeah, my service does take advantage of the Can Slim approach because it's a qualitative approach. They're looking for stocks with really strong fundamentals, strong leadership and management in the company, and institutional following, and earnings growth, new and new products, and a lot of growth potential. The one major difference I'd say is that I feature top quality IBD stocks that are bottoming out too. Okay, and setting up in these reversal patterns. When the stock will pull back either due to market conditions, or maybe it was downgraded or some other issue that came up. But spotting these reversal setups and so forth allows my subscribers to pay these bargain basement prices for a lot of these leading stocks when they start moving back up again. And quite frankly, in my opinion, there are few faster ways to make money in the market than trading leaders that are setting up in these reversal patterns. By the time stocks form the standard cup and handle or flat base or something else, you're already sitting in a nice profit.
What besides the reversal, the cup or handle, are there any other types of chart patterns you look for? I know in some of these bigger cap stocks, and really all stocks, sometimes you get double bottoms and triple bottoms, things like that. Is that something that you focus on at all?
Absolutely, and it takes a long time to ferret out and to realize stocks that are setting up in these patterns. It's not something that you can learn in a day or so. But no, I'm talking about flat bases, cup and handle patterns. Yeah, triple bottoms, double bottoms, flat flag and pennants and so forth. But not the least of these, again, is, I keep coming back to that, are the reversal patterns that help you really pinpoint when a stock has bottomed out. And yeah, sometimes it's a triple bottom or a double bottom. And they're setting up to blast higher. Chart patterns tells you so much, and just about everything you need to know about a stock.
How long, like let's say you identified stock A here as as a potential home run potential. How long does it take for you to analyze it and determine that it's going to be a candidate? And then also, what percentage of times do you do the work, and then you say, no, this one doesn't have home run potential?
Well, even if you learn from the best traders, as I did, and analysts and that kind of thing, when I was working at the Business Channel, picking their brains and so forth, it still takes. There's really no shortcut to this. It takes a good 3 or 4 years to really master the art of spotting these patterns. There's just no easy path. However, once you learn how to spot these chart patterns that leading stocks are forming, it's really cool because you're sitting on a big mover and it's setting up.
Any other indicators, that you look at for the overall market, or, do you pay much attention to volume in individual stocks? Any other indicators that you use?
Oh, volume is huge. That's the rocket fuel that really blasts the stock higher. There's no doubt about it. However, when you're talking about reversal stocks, sometimes the volume's not there because nobody knows that they need the stock yet, that kind of thing. But yes, generally volume is probably the most important, and the price volume action that the stock moves in. But I also follow money flow indicators. Just like Jerry Maguire says, show me the money. Well, to me, show me the money flow indicator, and I want to, especially on a weekly basis, I want to see that people are accumulating that stock and so forth.
Okay, and I noticed that you use candlestick charts. Is there a reason for that?
Well, I find that candlestick charts are much more revealing than line or other types of charts. When you are looking for a bottomed out stock setting up, especially, they're setting up to reverse their downturns, candlestick charts can be invaluable. Steve Nissen, of course, wrote a great book on Japanese candlestick charts. It's just funny that they were invented back in the 1700s, and only now are more and more people starting to take advantage of them. I think they're great. They're also great, incidentally, for knowing and kind of assessing when a stock is starting to tap out too, because they'll throw off these various candlestick chart patterns that indicate that they're topping out.
All right. Well, now that you've definitely have proved you do your homework and stuff, I'm sure our listeners are on the edge of their seats here and see if there's any stocks out there. I don't want you to give away your secret sauce here, things you give to your subscribers here, but is there anything you have in the coffers here that may have some home run potential?
Any stocks right now?
Yeah.
Well, I'm looking at Carter's. For one, I think GoPro still has a lot of potential. I think Jazz Pharmaceuticals may finally be ready to move higher. There's a whole cast and crew of stocks, even in so-called bad market conditions, that tend to move. Ambarella was a stock I featured just shortly. It was up 24% in a matter of 10 days off a reversal pattern again. And so there's all kinds of stocks. I think, and recently you look at Chipotle, just an amazing success story. That's up like just, $116 a share from where I, posted it around the end of June or so.
Okay.
So
Yeah.
I think there's some of the stocks I mentioned, I think have a lot of potential. There's a lot of other ones. If people want to subscribe for 2-week trial and check them out, I suggest you do that.
Okay. What about, do you short stocks at all?
No, as a matter of fact, I don't usually short stocks, except for in extreme situations when a stock is forming a head and shoulders, a double top pattern, or something like that, or when the market just hits the skids. But generally, I don't recommend to others to short stocks because your timing has to be spot on, and your potential losses, of course, are unlimited. Anyway, in my opinion, there's a better way to trade market downturns or corrections, and that's finding stocks that have bottomed out and are getting ready to rebound. In my opinion, again, it's one of the easier and faster ways of making money by spying these reversal setups and everything, and it's a big part of my service.
Okay. You said you were, when we came on, you said you were listening earlier in the show, and you probably heard our lively debate here about Twitter. Earnings tonight after the close. Any observations in Twitter?
Well, I think Twitter could rebound from here. It seems like it's about as low as it can go at this point. Though I've said that before, but they move from one. That there's a stock and a company that moves from one earnings release to another one. It's somewhat of a lightning rod stock in some ways. I call them lightning rod stocks because people feel really strongly for it or strongly against it. Traders. So I don't know. That's a tough one, but I think they're due. They're overdue, perhaps.
Yeah, they
for
were
an
also really
surprise.
beat up on. They kind of got the double whammy because the earnings got released during the day. Accidentally, they got whacked, and then the numbers came out, so they kind of got a double spanking on that one. So, well, we'll see what happens. Any final words of advice you would give traders that are, either experienced or just trying to get started in the market?
Well, I think the essence of good trading is buying the right stocks at the right time, and buying the right stocks you want to trade. A lot of people trade, junk quality stocks. Trade quality leading stock that have strong track records for earnings. And by buying at the right time, I'm talking about using charts to identify the best buy point. After all, a buy point is really just the point of least resistance to a stock moving higher. In essence, that's what it is. Other things I'd say is don't co-opt other traders' strategy, especially those that are not right for your personal circumstances. There are a lot of nuances to trading that you want to master. So you want to master one solid and be proof to yourself that you're very capable of one main trading strategy. And I would suggest that trading breakout stocks like what I have in my newsletter and reversal picks is probably the best way to do that. And then the third thing I'd say is just look out for market conditions because 3/4 of all stocks tend to follow the market. And whether you like it or not, some people say, why is my stock down? Well, take a look at the market. So you got to follow that as well. Pick the best times to make your trades.
We've been on the line with Paul Johnson. He's the publisher of Stock Potential, trying to identify stocks with home run potential. Paul, thanks for coming on the show. Great information. We hope to speak to you again soon.
Thanks so much, Joe. Really nice to be with you.